We've come up to resistance again. Tapped it twice, so once, twice, lower high. So we got a double top. We've broken out through the neckline, so we take an entry, and now we're making a move down. Now, in terms of taking profit, you either take it at this structure here, or we'll judge it and see whether there's a little bit more to give and tap kind of the larger high time frame support level, a bit lower down. But yeah, very nice structure. Yeah, setup is beautiful, so we can't go wrong with it. We got a oil short. We opened it last night. Set our stop loss at 74.4, so it's just above. It kind of stayed here for a bit. Consolidated, lower high, double top, broken through. So now we're coming down. So again, another beautiful setup that we've got here. So let's see what we can get. Just move this.
Suited for space. And there's also interest in using 3D printers to print customized meals on demand.
Maybe we need to kind of reconceptualize what we mean by architecture to imagine an environment in which we operate to an entire cosmic horizon.
Hyundai Motor, connecting art and technology.
4% higher, perhaps not surprising given the news out of Nvidia yesterday as well. We'd seen some semiconductors.
Those that just joined us, welcome. So as mentioned, we've taken a short here on euro pound, we've taken a short on oil. We're also taking a short here on Canadian dollar, Swiss franc. Okay, so we took a long yesterday, we closed out, we cut our losses just because it did look like we're going to break trend line. However, overnight we held trend line, we pushed straight back up, we're holding structure, so we're looking at a nice push up. It's just come down and tested that order block just here, right, for liquidity, and now we're moving back up. So things are looking good. We're holding that structure quite nicely. So let's see whether we can get an actual breakout. Yesterday, obviously, we took a long over here on this break. It was a fake out to the top, and we moved straight back down. So yeah, second try at it. So let's see what we can get. Those that are new to the channel, feel free to message us in the chat section. Any tier that you want us to go over, more than happy to do so. So yeah, just fire away. More than happy. But this structure here is a really, really nice structure. Tested once, tested twice, failed to break this high here. Lower high. So got a nice head and shoulders. We broke through here, retested that neckline, and now we're moving down. So we'll see how far down we can take it. But yeah, beautiful. Those that are liking the stream, thank you very much for liking the stream as well as following. Very much appreciated. See what we can get. Yesterday's trading sessions were a little bit choppy. Capitalized on some, lost on some. It got a lot better post London close. We made it very, very, very nice short position on gold. Let me get it up. Just so we got strong test of the top of the range, right? Let me go on the high time frame so I can show you a bit of structure here. So 4 hours nicer. So we got the range kind of forming here, right? So top of range, bottom of range. So we tested the bottom, went to the top, came back to the bottom, went to the top. That was yesterday. Okay, strong move. And we tested the top, tested the 50, and then we started to look bearish. We started to make a move down. We had this natural trend line here, right? So we had 1 peak, 2 peak, 3 peak, and just started moving down, right? So the buyers didn't strengthen at this point here where they shut off and continue kind of getting those candle closes above that level and actually looking like they're going to push up. They failed to come in here, as you can see from that volume, and we've got a nice supply dump here and the continuation to the downside. Where we took our entry yesterday was actually after the break, where we got, it was on the 1 minute. It was a very nice setup. Let me just go all the way back and show you. Get rid of that. Where is it? Okay, here we go. So this structure just here, right? This structure here is where we got in, where we got, there we go. Where we almost got kind of a bear flag. Okay, we breached out, came back up, tested, and then we just got that impulse leg all the way down. We ran it down to this wick here, where we closed off. But as you can see, we kind of pushed a little bit closer and deeper to that support zone. Our actual take profit was at 1956. However, this candle here I really didn't like the look of, so we cashed out. It was 830 pips or something along the lines. It's a very nice position taken. But yeah, let's see what we can get. Yeah, we're looking good. Welcome guys, welcome. But yeah, some very nice setups, that's for sure. We'll go over Bitcoin. Let me just show you the setups that we sent out yesterday. So there was your gold. Okay, lower time frame, bear flag, got in, and we made that move all the way down as shown. Bitcoin finally broke through its support just here, right? So it was at that bottom of kind of its high time frame range. We started consolidating at the very bottom. We actually got that breach all the way down to the 4-hour range support where we found support, and then we actually started to move back up for the day. We took this oil short towards the end, broke through trend line. We came down roughly about 73 dollars. So yeah, let's see what we can get. Let's see if we can hold this as well and start to build on some positive structure to move to the upside here. I'll go over Bitcoin in just a second. Whoever just followed, thank you very much for the follow. Also those that are liking the stream, thank you for liking the stream, very much appreciated. Let's see what we can get this morning. Let's see. Let me go through a Bitcoin update with you. Okay, so Bitcoin. We finally got some movement, which is nice. So we can start looking at some more trades here, just because it's been very quiet recently. Not done a great deal. Okay, so as shown on the post just a second ago, obviously this was the wider range, the 4 hour. Sorry, bear with me. So here was the range, right? So top, we got kind of mid-level where we kind of held position 1, 2, 3, 4, 5 whole load of times, and then we got the bottom of this structure here where we actually came down and we tested, right? So yesterday, you'll see it on the 15. So here we go. Nice tight range, lower time frame, and we just look bearish. Okay, we actually finally broke through and we moved to the next level area of support. Obviously we got a little bit of cooling off. Now I was expecting it to be relatively shallow and hold this point, but we've got that breach, 50 moving average. We got double top here. Okay, held, and now we actually broken through trend line, retested trend line, and now we actually made that breach of the current low here, right? So now we're building up on structure here, probably looking at a bit of a compression in price, okay, and then either push up or push down. Now, I mean, the economic outlook isn't great. Obviously, this whole US debt default is looming around the markets. Okay, so the closer that we get towards that date, now who knows the actual date? There's a little bit of skepticism in terms of whether at the right at the beginning of June is the date, or there's a little bit more of a threshold. But anyway, if a decision doesn't get made, all right, so the closer we get without a decision, the more movement to the downside we're going to get. Now, in terms of support, we're looking at a move towards that 25k. We do need to ideally breach through that level. So obviously we tapped it there. We saw some buyers coming in, but we're still continuing to look bearish here. So hopefully we can break through here and start breaching. There's a nice wide support area, so anywhere around here it's between 25.2 and let's say 24.6. There's a long-term trend line there as well. If we breach and close beneath that this long-term trend line here, okay, that's where your sellers should be coming in. You're going to get a lot more liquidations. Now, this is some nice structure here for support, so that's where I'm looking at it holding. Just because of the price action, we've not been having something like this, like an insane move from the sellers. So I just presume we're going to tap next strong support, move back up, and then maybe see that strong move from the sellers on the break of that trend line. Okay, so yeah, we'll see whether we can play it to 25, cash in, and then get back in on a slight rebound for that break of that trend line. Now there is that 200 daily moving average, which is at a little bit of structure here. Okay, but if we can get beneath that 200, okay, things will start to stack up and move much lower. This level here, where we got that accumulation range, let me just show you. Where we got that accumulation range, right, and then we got that huge push up, hasn't been tested as new support, right? So this structure just here where we got that breakout. So that's a likely area if we do get beneath that 200 moving average and that trend line, where prices will go to. So your 18k is looking like a pretty sweet number. So yeah, we'll just play it from level to level, just because the sellers haven't really been taking things much kind of to the downside. So we'll see. Okay, so euro pound's coming down nicely. Thank you for the likes. Thank you for the follows. got a few of you in here, so yeah, we're looking good so far. Oh. See whether we can get all the way down here. But yeah, this is some really nice structure. We were scouting out some trades to go in the pipeline, and this one just stood out very nicely. From your hourly chart, 1-2 test, lower high, double top, breakthrough neckline, retested, we got in, and now we're moving down. So very, very, very nice setup indeed. Now, in terms of economic calendar, right? What have we got here? Get a little bit of data today. I know we get jobless claims, GDP from the US, and then tomorrow's your big one for the week where we get US PCE prices. Now, obviously, the last CPI report wasn't great at all. So we'll see how things kind of play out on that PC tomorrow. But yeah, there's going to be a little bit of movement to end the week. So we'll keep a close eye on things. Okay, we've taken a short on oil. This was, to be fair, we took the short yesterday. It pulled back up. We set our stop loss at 74.4, just above this structure here. At that time, we were holding that trend line there. Now, it breached, but it wasn't a strong break. Okay, as you can clearly see, we built up on the top here. Bam, bam, distributed, and now we actually broken out and held structure. So we'll see whether we can start breaking through these levels. It had a huge move to the upside yesterday, and we caught a few trades on it. Yesterday we caught a short. There was your trend line. So this was yesterday. We broke through, so we had 1, 2, 3 tops here. Again, same structure, lower high formation, tap for liquidity, supply got dumped, moved all the way down, pushed back up. That's where we got on another short, and we moved it down and took some profit here. Okay, so things are loading up. Okay, it is starting to build on a little bit of a top here, so we'll see how things kind of play out. It still kind of runs the risk of rebounding quite strong and past this point here. So as soon as we get to this point, we'll just move it to break even. Just because, again, we do run that risk of it finding support and rebounding straight past this structure here. It's not a very strong structure in terms of liquidity. Those that are new to the channel, feel free to touch base with us in the chat section. Any TA that you want us to go over, we're more than happy to do so. So yeah, feel free to chat to us in the chat section. We'll keep an eye on it. But yeah, we're looking really good here. Okay. See what we can get. We got a take profit coming up. Where is it? Yeah, so we got to take profit at 0.86775, so literally anytime soon, so just here. And then our second take profit is at 8,666, so all the way down here. So let's see how things kind of play out. Again, as mentioned, nice structure, tap for liquidity, lower high, and we got that impulse leg down. So we'll see how far it can take us. Also yesterday we got UK CPI headline came down, everything else went up. Okay, so it really doesn't look good, to be honest. And I mean CPI is still extremely high, so it came from 10.1% down to 8.66 or 7%. I'm pretty sure. So still extremely high. Here we go, 8.7%. Yeah, it's not looking very good. Let me just refresh. Yeah.
Spelling out concern, Fitch considers cutting America's AAA rating as a debt default looms.
Guilt trip. UK borrowing costs soar to Truss-era highs, leaving Sunak and Bailey with little room for manoeuvre.
Pause for thought. Fed officials lean.
Okay, so we got German GDP this morning, minus 0.2% year on year, minus 0.3% quarter on quarter. Okay, 1:30 is where we get all the next data. So we get continuous jobless claims, GDP, initial jobless claims. We get pending home sales at 3 o'clock. So we get a little bit of data coming out.
Good morning from London, I'm Caroline Hepker.
And I'm Tom McKenzie. You're listening to Daybreak Europe live on London DAB radio.
Let's check the markets then for you this morning, starting with a red headline on the Bloomberg terminal. Further news around Nvidia shares jumping 23% after those sales forecasts topped expectations. So that's early trade in the US. In terms of Europe, though, a bit more negative. We're down 0.2%. FTSE 100 down by 0.5%. Down 6%. We learned Germany went into recession in winter. Also, you've got the overhang of the debt ceiling negotiations. Plus, think about that dreadful CPI number out of the UK yesterday.
Yep.
Inflation was higher than all economists had forecast, and so you've got still big moves in gilt yields. On the 10-year, we're up 7 basis points for UK gilt yields, and on the 2-year, we're up by close to 4 basis points at 4.4%. Compare that to the 2-year US yield of 4.38, the 10-year US yield trading at 3.74. This is the Bloomberg Dollar Spot Index is up by 0.1%, and oil prices this morning on WTI futures.
Okay, right. For some reason, I can't see your messages here on TradingView. However, I have got it up a different way. Serge, morning, my man. Hoping for better trades today. Yeah, let's see what we can get. The evening session yesterday was a lot better than the morning. Can I get your point on Nasdaq 100? Yeah, we did try and get a short position yesterday. It looks like it's coming off its highs. So, I mean, we'll see how things kind of play out. I mean, we've got a nice rebound here. It looks like it's going to go and tap for liquidity. Now, it's retested this area and rebounded. Here's your next structure. So, I mean, judging if we can break through here, right? Just this level. If we can get past that level here and we actually close above it, we'll go all the way up to this area. Now, if we fail here, we're just going to come down and build up on a double top and just break down lower. But this is a strong test here. Just got to keep an eye on that 4 hour, on that 1 hour, see if we start building up on the top here. Yeah.
We have, because the cost of borrowing, the gilt curve rising back up to those levels, not seen since that Liz Truss mini budget last year, and I think that raised a lot of negative connotations. I mean, we have this position now.
But I mean, again, this whole debt ceiling situation isn't good. Now, I don't presume we're going to get a decision anytime soon, so we might start pushing up. This is the very top is here, okay, and then if we fail, then we're just going to come back down. We're just going to build up on a range. if we fail to break through and close above this previous high here. So a little bit more structure to play out, but obviously we got a bit of a top here, 1, 2, maybe 3, back down, push towards the bottom of that range. Closing 50% of your position at 2R. Will leave the remaining position risk-free. Yeah, amazing, mate. Smashed it. Absolutely smashed it. So yeah, so it's hit our first take profit anyway. 0.86775 was our first. Got a little bit of structure here. If we can come down a little bit harder, it'd be nice. Let me just. Might be the case though. I mean, it's at that 0.5, isn't it?
Well, as hawkish tone comes after Fed Chair Jerome Powell said the policymakers could afford to watch the data and the evolving outlook before making a decision. Officials have already raised rates by 5 percentage points.
Yeah, sorry about the delay on responding to your comments. As mentioned, the terminal that I get up when I set up the live stream isn't showing up with your comments, so I've had to do it a different way. But I'm here. I've got you.
NVIDIA is the world's most valuable chip maker. It said sales in the 3 months ending in July will be about $11 billion. That shattered an average analyst estimate of $7.18 billion. The outlook suggests that NVIDIA is benefiting even more from the AI frenzy than thought. The company has positioned itself as the top provider of components for training artificial intelligence software, and that has helped it weather a broader slowdown.
Yeah, we got to be careful of that rebound.
In New York, Charlie Pellet, Bloomberg Daybreak Europe.
Okay, those are a few of our top stories then for you this morning. Look, we're going to talk about the US debt ceiling story, which is starting to really rumble markets a little bit. And also we have the CEO of Klarna, which is the buy now, pay later giant, Swedish giant. It's going to be a really great conversation at 9:20. But I want to mention the net migration figures that are coming out in the UK at 9:30 a.m. This is a really, really huge political issue, but it has ramifications for the labour market as well. Immigration, highly charged. Leaving the EU means that there's no...
I'm going to move my stop loss all the way just here, just above this candle here, so 0.8679.
So that's the kind of figure, perhaps even as high as $1 million. And potentially this is going to be a very, very big deal for the UK government again.
Well, it's worth remembering, not many other countries. Which other countries produce and publish net migration figures on an annual basis? I'm not sure they do. So we have this obsession. It's one of the political priorities of Rishi Sunak. And then you get this knee-jerk reaction on the political front around measures like reducing the ability for the families of students studying here to stay and remain in the UK. Well, we need to attract students because our universities need cash more than ever, and it's international students that provide that funding. But yes, political hot potato. The other question, of course, is how this all ties into the labour market.
Yeah, absolutely. Okay, so we'll bring you that number when it comes through. Let's also, though, talk about the debt ceiling.
Good morning, mate. I hope you're for better trades today.
That
Yeah.
is the warning from Fitch.
Yeah, sorry. Obviously, you came to the different platform. Right, I'm out here. All right, beautiful. Yeah, lovely trade. Can't go wrong with it, can we?
Our big conversation about what happens with the US. How important is the warning from Fitch, firstly, Valerie?
Well, if we look at what happened back in 2011, the S&P, when they eventually did downgrade the U.S., it actually happened after the debt ceiling negotiations had come to an end. So it just goes to show that Fitch has their eye on the situation, and if the downgrade doesn't come...
All right, we'll let it do its thing now. We'll go for... I'm just trying to scout something else. All right, so we took a... Okay, this isn't looking a bit better now as well. So we've tested this area now a couple of times. 1, 2, 3, a little bit deeper. Tested that trend line. Nice liquidity area. So we should start to see, or hopefully start to see some bullish structure. Yeah, nice. got a
it
nice
seems
bit
clear to me
of buy
when
side
it comes
coming
to
here.
vintage
So
deals, it really
let's
comes
see if
down
we
to
can
just how
come down a little bit, hold,
dislocated
and start
markets
to
have
really
become.
push up again.
Every day this week, these yields have been rising. 2 days ago, it was the June 15th bill that spiked. Yesterday, it was the June 6th bill that spiked. So it's kind of a good way to
Let's
judge
go.
how
Okay,
majority
oil's coming
funds
back
are
down.
seeing the risk of where this X date might be. Let's see if it continues to move up the curve and maybe the
Thank you
June
for the
6th
follows. Thank you for the likes
spikes
as well, guys.
if we don't get any kind of movement on the negotiations in the next day.
Ven, let me bring you in. What do you make of what's going on? Our jitters
Don't
now
know why I
mean
can't
that the 2
see.
and 10-year notes are near their highest level since mid-March. So basically, we're at yields that we saw during the banking crisis. How jittery are markets?
Well, it doesn't look like the markets are pretty jittery at the moment, if you especially if you look at the 2 year and the 10 year part of the curve. Because if you look at the 2 year part of the curve, the markets seem to be saying, okay, the debt ceiling issue will be resolved one way or the other before the X date. At least that's what the markets seem to be thinking. And they are now looking ahead and
This is
saying,
also
okay, if
looking
the debt
pretty
ceiling
sweet now.
issue is resolved, what then becomes of inflation, and what will the response be from the Fed? That's one way of explaining what the phenomenal surge in yields, nominal yields that we have seen. Just from we were doing 365 earlier this month, and now we are at 440 levels.
Like a
That's
25
quite
200
beyond
test.
imagination in the space of just 3 weeks. And so that seems to be the market's calculus at the moment.
Fed, the next decision from the Fed, it's June the 14th. We know there's a debate going on within the FOMC, arguably the most acute debate since the start of this inflation crisis. But Jay Powell is clearly leaning towards a pause. Is a hawkish pause in June enough?
Keep an eye on it. We need to just have this top kind of formed. Ideally,
I think that we will get a hawkish pause in June, because I don't think the debt ceiling issue is going to drag on for I don't know, we don't know how long.
ideally get
So
back
I think
beneath that
going
area.
to be raising rates in June would be optically very
So we
good.
can either
So that leaves us with
take the short, set the stop loss just above there. If we get stopped out, then we'll just look for another re-entry.
Several members were thinking we need rates higher than 550. So, and that was during the eye of the storm, during the banking turmoil. If 7 members thought we needed 550, then presumably with the debt ceiling issue, if it's resolved, then they would presumably think we would need far higher rates than that. And that may mean that although the Fed may pause in June, we may get subsequent rate hikes, and the markets aren't quite positioned for that yet.
Fen, what happens with the dollar then in this case as we get closer to the X date? I suppose where do you see the dollar then over the next couple of weeks at least?
Well, you would think that if there is a default, then that is definitely dollar negative. But in the run up to the default, people are pushing real rates higher, and those real rates are supporting the dollar, and that's why you see the dollar holding up pretty firmly despite all the jitters around the debt ceiling issue. If they downgrade, and if real rates come down, which you would expect real rates to do, should there be a default, then the dollar should tumble. Logically, that's what should happen. But we have seen funny things happen in terms of what is the safest haven in case of a default, and that's the $1 million question. But theoretically, that should be dollar negative, albeit the dollar is being
Okay.
pushed up by high rates.
We're holding on to structure.
Yeah, and if I could just comment briefly on the dollar, I think
Should start
if we
moving
look
up
at
soon.
global growth in the data we've seen recently, we get increasingly sour data.
Sellers kind of
Numbers
died
being
off,
released
yeah.
one
See
day
whether we
to
can get some
back
buyers
off the
coming in here.
recession. And then we're getting more and more sour data out of China, and it seems to be like it's going to be China dragging us one way, Europe dragging us one way, and the U.S. consumer may be the only one lifting us up. And I think that's been a bit of a driver of dollar strength recently, just the fact that U.S. growth seems to be holding in there quite well. That's a dollar positive story. So if we get that kind of momentum in the data, especially with the
cautious in that environment?
That's hard because GDP data is quite backward looking in a way, but a lot of the forward looking indicators like the PMIs that we've gotten does look pretty negative for the manufacturing sector. And traditionally, the manufacturing sector is the most forward looking versus manufacturing and services. So it does look like things in Europe are slowing down, but I don't necessarily think that means that the ECB can take their foot off the gas when it comes to raising rates. They still are behind where the Fed is. In terms they were late to the game.
Okay, we've got another test.
More than the Fed was, and late to ending QE, so they still have.
This area is holding.
Where they reach what we call restrictive territory.
Yeah. Okay, Valerie, thank you so much.
Got gold pushing up higher. It's coming off its support level here.
Great to have you both on. Well, the big story in markets today, of course, the debt ceiling in the US.
Okay, let's get to the global top stories then with Leanne Gerrans. Leanne.
It's not too bad.
Thank you. Bloomberg understands
Could push all the way up here.
to ask about 40 staff in Asia to look for jobs in
Currently at this high.
as it grapples with an industry-wide decline in deal making. About half of the roles are based out of Hong Kong with a focus on China, with a majority of affected employees in junior positions. BOFA is one of the few major Wall Street banks to have avoided job cuts in the recent months. Now, Ron DeSantis has officially launched his long-awaited U.S. presidential campaign, signaling he will make culture war issues central to his strategy to win the Republican nomination. The Florida governor made the announcement on a Twitter live stream with Elon Musk, which was actually beset by technical glitches and also audio problems. Polls suggest DeSantis is currently the strongest challenger to frontrunner and former President Donald Trump. And Blackstone CEO says the investment giant is in talks with several U.S. regional banks to explore the purchase of assets and loans. In an exclusive interview with Bloomberg, Steve Schwartzman says pressure on banks will come from regulators as well as from the markets. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Caroline.
Leanne Gerrans, thank you so much for that world news update. Glad to have you in the studio. You're going to join us for the next big conversation that we have with the CEO of the fintech giant Klarna about their plan to launch a new loan opt-out system, but also just about how well the business has done, rising interest rates. How is that affecting the bottom line at Klarna? The CEO joins us live here on Bloomberg Radio.
Yeah, it's not the most ideal entry, to be honest. This would have been a good entry just here on that retest. I got see if we continue holding this area. It's a decent amount of liquidity still to be soaked up around here. We've taken a short here on Bitcoin, by the way. See whether we can continue moving down. It's a tight stop just above this high, so if we break through trend line, it's probably looking like we're just going to continue within this range, push all the way up here.
Senator, I'm just curious about that. We've been hearing a lot about just in the last 48 hours since that letter came out from Janet Yellen on Monday. She really hasn't changed the language, though. We've spoken with a number of folks at Treasury who say Janet Yellen actually doesn't come up with that date and has been consistent with the as early as because they can't pinpoint a specific date. So what else should she have said?
She can say what she said this past Sunday. It could be, of course, as early as. It could be as early as 2 weeks before then. If you're just speaking with a lot of wiggle room, it could have been as early as pick your date.
Right, just remember, as mentioned earlier, if we hit that 200, we'll just move it straight to break even. Again, we run a risk of actually seeing a strong rebound and actually breaking through this high. got a little bit of structure just here. See,
Have more or less exposure to these equity indexes just keep going up.
Analysis of the day's Wall Street action.
What's the thought on Apple here?
From Bloomberg Intelligence, Bloomberg Opinion, and influential newsmakers.
The bond market was the boss.
The Tape with Paul Sweeney and Matt Miller. Subscribe today on Apple, Spotify, and wherever you get your podcasts.
The New Deal created American infrastructure that unleashed new opportunity. Today, we're doing it again with massive investment in modernizing our infrastructure to build for tomorrow. At Build America Mutual, we protect your municipal bond investments that help make it happen, building a vibrant future for our and your portfolio.
Philly CHZ. I can't give you that information over a live stream on TradingView. However, I will message you privately, or if you message me privately, then I can reply to you.
Daniel from California. Choosing whether to pay the rent or pay to fix the car to get to work doesn't leave us with much at all. Now we can't even pay for meals.
Hunger is a story we can end. End it at feedingamerica.org. Brought to you by
See if we can make that break. Well, that euro pound was a pretty sweet trade. So hopefully a few of you capitalize on that. Those that join a bit after, let's see what we can get currently in a short on oil. We're taking a short here on Bitcoin, but still run the risk of actually breaking. So we just set that stop really tight. We could push up to this height, tap for liquidity, and then come down. But we got, so let me get rid of this. So this is your 4-hour structure here. Let me get rid of that. Now we're in a tighter range here, so just need to be careful. Hopefully we can just stick to here. Got a little bit of sell side coming in on that, but we shall see.
Let's start with the top line, though, Sebastian. How's the business been doing in the first quarter of this year?
Well, actually, in our case, fairly well. Obviously, we do have seen a slowdown in growth in general, especially in online e-commerce, and UK is performing slightly worse than the other European countries. So you can see an even worsening situation in the UK. But in general, at the same point of time, what we see is that the average order value is actually fairly similar. In our case, about £75, as it was, before the crisis. So what it seems to be, people buying more cheaper items and less expensive items, but it ends up being the same basket value for a lot of those retailers. But definitely a slowdown in growth in general, and it's still, you see a very clear trend of return to physical stores and restaurants and kind of spending more there and less online, right? So you still have a little bit of that going on after COVID. Kind of year-on-year comparisons are still a little bit COVID impacted.
Oh, so that evolution continues. Let's bring in Leanne Gerrans from Bloomberg Radio now as well, who has an ear to the ground on this subject matter as well. Leanne.
Seb, good morning to you. Seb, traders are now pricing in UK interest rates at 5.5%. How much does this hurt your business, offering 0% short-term loans?
Well, it actually doesn't hurt it, because as you just said, that makes our offering to the consumers even more attractive, right? Because it is 0% interest and interest rates are going up. So it's the opposite. We see more interest in our product. Credit cards are becoming more and more expensive. They can cost 40, 50, 60% APR if you're unlucky, right? And so on the cost side, however, for us, you got to remember that
Bitcoin pushing up a little bit higher.
Big balances. In general, outstanding balance on a credit card in the UK is £1,100. In our case, £75, and people pay it back within 3 months or 30 days. So we turn around the balance sheets almost 12 times a year. So the interest rate cost for us is actually very, very small, a few percentages.
All right, we're gonna add some units here.
Because we can take that money and borrow it out again multiple times on the same year. So to us, it's actually almost like a benefit in the sense that we have a higher interest rate environment from that perspective. Now, obviously, it's a little bit more expensive. I'm not going to say that it hasn't
Got some nice buy side.
It's actually margin.
But then, so hang on a second, is the product a loss leader for you?
Sorry,
Is the product a loss leader then for you, because there's a cost?
No.
Okay, there goes your gold.
A lot of markets, it's making a good gross margin. But the cost of the interest rate is a small piece of it. It's more
Okay.
MP Andrew Griffith highlighted this idea that we should also allow people to opt out. You know, we all want to be a company that when we get a great idea and when it makes sense, we can act quickly, we can actually deliver on it and do it. And in this case, we urge all the banks and others to do the same because it exists in other industries. Credit is in general a good thing, but obviously, unfortunately, some people may overuse it or overextend themselves. How do we help them to put mechanisms in place in order for them to control that? Just like you can.
Alright, we're moving our stop loss to break even here on oil.
And so I think this is a good thing, and I think more banks should follow and offer these kind of services.
So does this mean that you're getting ahead of regulation that could come in, that the government is discussing at the moment, as you've just spoken to us, that you have been talking to Andrew Griffith?
Well, I think that
See whether we can hold.
I think the challenge, what people forget with regulation in banking sector is that we've regulated in a bad way. We regulated about saying you have to ask these questions when you give somebody a loan. You have to do this and that. I mean, you are still probably suffering from the European Union's stupid decision of asking you to consent to cookies every time you go to a website. How has that increased privacy online? It doesn't work. These kind of prescriptive regulations are very poor. So what we're trying to always lead on and show is like, let's look at outcome-based regulation. For example, I think government here in this case should regulate and say your losses cannot be higher than credit cards. That's great. However, we manage to solve that because the benefit with that, the problem is when you do very prescriptive regulation says you can only do this and that. The problem is first, the less serious companies tends to find a way around it. So you usually over time don't accomplish what you want anyway. And then secondly to that, the bad thing about it, it creates less mobility in the market, meaning less competition. It becomes harder for consumers to switch. You don't want to go to a different bank because it's so much paperwork. That paperwork is partly there because of that regulation. And then that's why we see excess profits in this industry. That's why the banks have been making such an excess profit.
Okay, well, we're coming towards that 200, so do be careful of a strong rebound back up. As mentioned, I mean, we're at break even now anyway, so it's risk free so far.
The fintech, the innovative pitch that you're trying to make versus the kind of traditional players in this space. I suppose I will be challenging back to you though and say that these rules in some ways remind me a little bit of the limits on gambling websites. You know, these are the gambling industry has got these kind of voluntary agreements that basically means you can limit betting on various platforms, but we know that there are loads of workarounds that ultimately does not work. This kind of voluntary industry sort of standard. So is your effort really going to reduce unsecured lending on your platform or across the industry? Is that actually the aim?
Yes, the aim is to make sure that we take responsibility for consumers. And most consumers are actually great payers. Our 99% of our customers pay on time. They don't overextend themselves, and they actually use our credit because it's a healthier form of credit. It's installments, it's fixed installments. They don't revolve. We don't offer revolving. We don't charge 60% interest rate. So most consumers use these products very responsibly. Can we find anything that can contribute to the people that, for different reasons, are not using their products in a responsible way? And I think yes, this may be one. There are people that are aware that they have an issue, that they may overextend themselves, and they may want to create a little bit more friction. I think most of you, I at least have done it on my social media apps. I've created this, limit on my phone so I can't use it for more than an hour a day, and then it reminds me that I still have to say I approve it. Right? It works for me, so I think this will work for some people as well to help them have a little bit of extra friction on an individual basis to set that up for yourself. So yes,
okay, well we need to get you back in, Sebastian, in a couple of months' time to see if it is playing out as it is for your social media addiction or efforts to curb that addiction. On AI, look, I know you're focused on this topic as many are. We're trying to cut through the hype, get to the real world implications of this. How significant are the trends that you're seeing as a result of what's been happening with large language models, generative AI? And specifically, what are you and Klarna doing around the underwriting and the use of AI in the underwriting part of the business?
Well, first and foremost, obviously you have to always be mindful of the privacy and technology, security aspects of this. I think also I would just quickly on more societal level. One thing is that when I was starting to experience this with ChatGPT back in November and so forth, I leaned into this. I took contact with Sam Altman. I really wanted to learn. I spent a lot. I've really nerded out on this. I've gone down very much in details. I've written my own LangChain just to give you a sense.
Okay. Okay. Yeah, things are going to develop, and we're not going to be looking for any entries elsewhere. Okay, we're just going to play with the trades that we currently got open. Short on Bitcoin, very tight stop, so it does look like we're pushing a little bit higher here. So just above that level, so 26,300. If we get tapped out, that's okay. We'll look for a re-entry up here at the top of its range, or its tighter lower time frame range, to then go back down. Okay. So yeah, just keep an eye on it. See how it plays out. Tight stop. If we get out, we'll get in here. Now you can also play out and set the stop loss a little bit higher. Go for it if that's how you want to play it. We're going to have it here at 26,300. The reason being that we're still at that 4-hour support and structure, right? So you still run the risk of a stronger rebound. So yeah, we'll just play it as it kind of develops. If it pushes back up here, we'll look for a re-entry and look for that supply dump up here, okay, at this level, to then get back in. So you can play it one way or the other. It's completely up to you. In terms of our oil short, stop losses at break even. We're looking for that break. Ideally, we want to close just beneath this point here, indicate that the suppliers are taking control and going to push towards the next level. At the moment, obviously, we're at this structure here. We're at that 200 on the 15 minutes, so we're holding a little bit of support. But again, we're risk free, so there's no implication, right? The other trade that we got isn't going as great, but it's holding support by the looks of it. Is your Canadian dollar, your Swiss franc. We've added some more lots just at the bottom here, by the way. Again, we're at the trend line. We're holding. I mean, it's kind of struggling here. You are seeing some buyers coming in. So let's see whether we can get back up to that level. Otherwise, yeah, we're probably going to see that break. We are seeing a little bit of buy side coming in, which is quite nice. Some here, some here. And your sellers are looking a little bit weaker, so we should see hopefully a push up. If so, then we're in the good for that New York opening session. So we'll keep an eye on things, see how they develop throughout the day. But yeah, well done on this morning's trade on euro pound. Very nice trade. Where are we down to now? 7, a little bit lower. So we found a bit of support on that take profit that we set. Looking a little bit bearish again. So I mean, you could actually maybe even take a short here. Just play it down. We have our take profit there. Yeah, could get from re-entry here. We'll see. But yeah, those that joined us this morning, thank you very much for joining me this morning. Fantastic. Just keep an eye on here. Yeah, you might have a re-entry here. Alright, yeah, we're taking a short here. Stop loss at 8678. We're playing it all the way down to 0.8666. We'll see whether we can get something here just before ending the live. What's going on? tell you what's looking good as well is got a bit more of a rebound here. Oil also. Okay. Alright, I'm gonna move it to break even now with risk free as well. Okay, yeah. Alright, so we'll break even. See whether we can get past this point here if we push back up again. Risk free. Canadian dollar, Swiss francs now starting to rebound nicely. So again, we'll keep an eye on that. Oil break even, continuing to come down as well. So things are looking really good for now. So yeah, we'll judge it and we'll join back on the next live for that New York opening session. So we'll be, we get a little bit of data at 1:30. So aim for 12:30, 1 o'clock to come back for another live. Okay. But yeah, guys, well done for this morning. Absolutely smashed it. Some very nice trades. Very, very nice trades. So we'll see how things kind of develop. Don't worry, I haven't forgotten to turn off the stream. I'm just watching this. I'll see whether we can close out and profit on the stream. Okay, I'm moving my stop to 0.86750. Yeah, oil's broken down quite nicely as well. Okay, so we're going to move to the next area. We're up a very, very nice amount here. Very, very nice. Right, I'm going to move my stop to 73.635. in profit as well. What's happening here? Okay, remember our stop loss is just here, 86750.
About the future, the UK going forward, and also the future of Klarna as a business as whole. He also talked about investing in AI, what that means for jobs, how the company is directing itself in that way, and also, of course, joined up in some ways with the UK government, listening to Andrew Griffith, and also bringing out this opt-out
Okay.
tool that is now available to many users of Klarna here in the UK.
We need to get past this point, really. It could be the case that we hold, we come back, we hold this, and then actually make that break up.
In terms of buy now, pay later, and crypto, and all of these other things that have boomed very rapidly, I think the threat of sort of quite heavy-handed regulation is there. So perhaps it's a response to that. But anyway, speculation on that Klarna CEO interview.
Thank you so much, Caroline.
Yeah, great to have you in studio, Leanne Gerenzer, of course. Now, it is 9:43 a.m. Welcome to Bloomberg Radio. I'm Caroline Hepker, if you're just joining us. Good to have you with us. Of course, as we think about the markets, a brief update there then. European stocks remain lower, down 0.1%. So not quite as bad as earlier this morning. FTSE 100 also down 0.4%. Xetra DAX down by 0.4% this morning. ASML is down about 0.5%, although the Nvidia outlook was extremely strong yesterday and saw their share price post-market jump. Stock futures for the US are also in the green when it comes to the Nasdaq, 1.4% higher, but it's in bond markets where you see most moves, the worry and the overhang of the debt ceiling conversations. 439 for 2-year yields, so up 1.5 basis points. UK gilt yields continuing to climb, 5 basis points higher on the policy-sensitive 2-year. On the 10-year, US yields at 374, UK gilt yields at 429, up 8 basis points. So another big leg higher in terms of rates for the UK. Brent crude futures down 1% this morning. That is a look at your markets. It's now 9:44. Let's take you through a few of our top stories and a reminder that Fitch has said that America's AAA rating is under threat as the political standoff over the debt ceiling inches towards a crisis. In terms of other stories, UK bond yields have hit highs not seen since the depths of the Trussonomics crisis last autumn. Traders are now betting on a full percentage point more in interest rate hikes after April's inflation reading yesterday came in much higher than expected. And lastly, UK energy bills are set to fall by 17% as the UK regulator lowers the cap on prices. Ofgem are cutting the amount that companies can charge to £2,074 for the typical household. It's unlikely to be noticed, though, by most consumers as government support is set to peter out.
You might get tapped out here on your pound.
For you this morning. Now, the latest figures out of the UK came out at 9:30 a.m. I mentioned it at the start of the programme. These are the net migration figures. So net migration into the UK rose to 606,000 in 2022. Bloomberg's UK government reporter Joe Mays joins me now to break down what all of this means. Joe, great to have you on the programme. This is a hugely sensitive
Okay, yeah.
topic. David Cameron
That re-entry
at the election vowed to cut
has just closed out,
to below
so we'll just leave it.
per year in Britain. It was seen as part of the reason that the UK voted for Brexit, and so there was a lot of focus when it transpired that the number of people coming to the UK has actually grown significantly. How much of this trend rise is about an increase
Beautiful.
in itself? How much is it about people coming from Ukraine, Hong Kong, those humanitarian efforts by the
Got some nice continuation down on oil. Okay, right, so yeah, we'll leave it there. Well done for today. We'll see you roughly 12:30, 1 o'clock UK time for the New York opening session. Yeah, thank you. Cheers.